Welcome to Web3 Watchdogs, the podcast that takes a deep dive into the world of Web3 security, compliance, and risk. Join Michael Pearl as he interviews executives from across the Web3 industry to uncover the challenges and opportunities of this rapidly evolving space. Web3 Watchdogs is sponsored by Cyvers, your one-stop shop for Web3 security and threat mitigation. Cyvers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cyvers.ai. That's CYVERS.ai.
Well, hello everyone, and welcome to the Web3 Watchdogs, the podcast that focuses on everything interesting in security, compliance, fraud, risk. And today we have with us a very, very interesting guest, Carla van Sintfiet. Carla is the Chief Financial and Risk Officer, and she's the member of the executive board of Poolder. Prior to that, Carla was with Deribit, and she has a very extensive and vast experience in the financial institution sphere and also in the crypto sphere. So, Carla, why don't you just present yourself and tell us about your background?
Yes, thank you so much, Michael. Thank you for having me here. It's a pleasure to be here and talk to you. Yes, my name is Carla van Sintfiet. I'm the CFRO at Poolder. Basically, my career I started in TradFi, always in the risk management function and within risk and compliance, second line of defense. I started my career at ING Investment Management, and I worked there for a few years. Later on, I moved to Shell Asset Management, Aegon Asset Management. Within Aegon, I transitioned to banking. I worked for Aegon Bank, which later on became Knap as an online bank. And later on, then I also was a head of risk at Mizuho Bank Europe. And then the opportunity came to move to a global exchange, Deribit, and then I was the head of enterprise risk. And and basically life took me to now Poolder, and I'm the CFRO and BC responsible for risk, compliance, and finance.
Very interesting.
Yes, yeah, it's been quite a journey actually. Like it's, I've always been interested in science all throughout my high school years, university years. I was obsessed really with learning as much as possible about biochemistry, genetics, mathematics, everything, and basically what I learned from science. It taught me how to think critically, how to analyze data, how to think in a methodical way. And these actually turned out to be transferable skills when I switched to finance. My transition into finance and risk management originated from a fascination, first in economics and then into the dynamics of financial markets and the role of risk management in shaping outcomes. That interest led me to roles where I could apply financial analysis to decision making, eventually culminating in my position as CFRO at Poolder. Web3 and DeFi felt like a natural evolution of that journey. These technologies are redefining the architecture of trust and value exchange, and they're doing it in a way that's both decentralized and programmable. What drew me in was the potential to build a more transparent and resilient financial system, and one that empowers users and challenges traditional gatekeepers.
Very interesting. So you switched from science all the way to TradFi and then to crypto. Very interesting and
Yes,
very unusual.
yeah, it is very unusual, but I really enjoy this journey. I mean, it really took me like to a lot of places, and but yeah, in the end, it makes me really happy, and this is the reason why I keep doing it.
Yeah, that's great. I can hear the passion in your voice. So
Thank you.
I'm guessing that the majority of our listeners are familiar with Deribit, but I guess not as much with Polder. The first thing that I learned just now is that you have to say Polder and not Poolder, even though it's a double O.
Yes, it's the Dutch way of pronouncing it, I guess. Yeah.
Yeah. But what can you tell us about Polder? What is this platform all about? What kind of users do you have? How much funds are you managing, and so on?
Yeah, so Poolder is a next generation crypto investment platform designed to make decentralized finance more accessible, efficient, and transparent for investors. At its core, Poolder manages investment funds that are deployed into blockchain-based liquidity pools. These pools facilitate trading, and in return, they generate yield. What makes Poolder unique is that we allow investors to benefit from this yield without having to actively trade themselves. So there's no need to time the market or to manage wallets or navigate complex DeFi protocols. We take away the complexity while maintaining full transparency and on-chain accountability. Our model works by pooling investor capital and deploying it into carefully selected DeFi strategies, and these are managed by experienced fund managers and governed by robust risk frameworks. As CFRO, I focus on ensuring that our models and risk framework are dynamic and responsive to market volatility, smart contract risks, and liquidity conditions. In my opinion, what sets us apart is our hybrid approach. We combine the transparency and programmability of DeFi with the professionalism and oversight of traditional asset management. So it's kind of like a bridge between the two worlds, giving investors the upside of Web without the steep learning curve and the operational risks of Web3.
So I wanted to ask you, as a Chief Financial and Risk Officer, CFRO, another term that I've just learned,
Yes.
you have to balance so many things, right? I mean, you have the market challenges and the market risks, and obviously you have the entire connection to the investors that you have to handle, and you have to handle expectations, right? You said that they do not invest themselves, but nevertheless you need to manage the expectations with respect to their yields and what they're getting and your investment thesis and so on. So it's a lot of moving parts and many things that you have to balance here. How do you do all that? What's your approach to that? What's your technique? Please share.
Yes. That balance between the growth and resilience is really at the heart of my role at Boulder. In the digital asset space, the temptation is often to chase yield at all costs. But sustainable success comes from building systems that can scale and withstand shocks. We approach this by embedding risk management into every layer of our operations. So that starts with extensive investment due diligence on tokens, on liquidity pools, on blockchains and protocols, testing our strategies under different market conditions and continuously monitoring on-chain activity for anomalies. We also maintain a diversified portfolio approach to avoid overexposure to any single asset or protocol. From a compliance standpoint, we try to be proactive rather than reactive. Even though the regulatory landscape is still evolving, we build our internal controls to align with best practices in both traditional finance and the emerging Web3 standards. That includes a robust KYC, AML processes, and transparent fund reporting and smart contract audits. Ultimately, my philosophy is that risk management and compliance shouldn't be a brake on innovation. It should be a catalyst for it. When you have strong guardrails in place, you can move faster and with more confidence. So a good analogy for risk management is a car's braking system, for example. Just as brakes allow a car to drive faster and more confidently by providing the ability to control the car, effective risk management provides the confidence to take calculated risks, pursue opportunities, and achieve objectives by mitigating potential negative impacts. That's the way I see it.
Yeah, I totally agree with the analogy. But in the world of crypto, the car sometimes decides to drive on its own, and the road keeps changing. So I'm guessing it's quite a challenge. And speaking of risks and challenges, let's talk about security risks, right? Because according to our data at Cyverse, in 2024 alone, more than $2.2 billion were stolen, primarily in hacks, but also in scams. And
Mhm.
security risks, and you've mentioned smart contracts and contract vulnerabilities, is something that everyone experiences. Obviously, when you're holding users' funds, but also when you're investing those funds into, let's say, risky smart contracts, risky protocols that are based on smart contracts. How do you mitigate that? How do you prevent yourself from being exposed to breaches and to other incidents with respect to security on smart contracts and on other venues, maybe even centralized venues as well?
Yeah, I think, well, the 2.2 billion loss to hacks and exploits in 2024 is a stark reminder that while Web3 offers incredible innovation, it also introduces new and complex risks. From my perspective, the biggest risk fall into three main groups, like one, smart contract flaws, poor operational security, and governance weaknesses. Smart contracts are immutable once deployed, which means a single coding error can be catastrophic. Many exploits stem from logic bugs, reentrancy attacks, or unchecked permissions. That's why auditing, formal verification, and continuous monitoring are essential, not just a one time audit. Operational security is another major gap, in my opinion. Private key mismanagement, compromised wallets, and phishing attacks are still very, very common. Companies need to adopt enterprise grade key management systems, enforce multi sig controls, and train teams on security hygiene. And finally, I think governance too. Many protocols still rely on centralized admin keys or obscure decision making processes that creates single points of failure. At Poolder, we emphasize decentralized governance and transparent fund operations to reduce these risks. To strengthen defenses, companies need to treat security as a continuous process, not just a checkbox. And that means layered defenses. So, real time threat detection and a culture of security awareness is really important. In a space that moves as fast as crypto, resilience isn't just about surviving, it's about being prepared to adapt and respond.
Yeah, I can totally agree with that. I love what you said about the multi-layer security approach, because at the
Yeah.
end of the day, so you've mentioned audits, which are obviously very important, but the thing is, after you launch the smart contract, basically, if you have the smallest weakness, the smallest vulnerability, someone
Yeah.
will find a way to misuse it, and that's why you need the continuous monitoring, the real-time monitoring. So
Mhm.
it's definitely advisable to do that. And one more thing that you mentioned, it's a great segue to my next question. You mentioned the fast pace that this industry is going. So I'm guessing that you at Mizuho and other TradFi venues that you worked with, you didn't experience that, fast pace and this moving scenery and this moving ecosystem that keeps changing technologically, financially, from the regulatory standpoint, and so on. How do you view this industry, and how do you adapt in terms of shifting from TradFi to crypto?
Yeah, it's true. I think the pace in Web3 is unlike anything in traditional finance. In legacy institutions, risk frameworks are often built around quarterly cycles and regulatory reporting and relatively stable market structures. In crypto, things can change overnight. And new protocols launch, exploits happen, liquidity changes, narratives evolve at lightning speed. That fundamentally changes how a chief risk officer must operate. In this environment, static risk models just don't cut it. We need dynamic, real time risk monitoring systems that can adapt to market conditions as they unfold. That includes on chain analytics, automated alerts, scenario modeling that accounts for smart contract vulnerabilities and governance risks. That said, I absolutely draw on lessons from traditional finance. Principles like diversification, capital preservation, and counterparty risk assessments are timeless. I think what's different is how we apply them now. For example, instead of assessing a bank's credit worthiness or liquidity, now we are evaluating the TVL logged into a smart contract on a given platform, or we are evaluating the audit history of a DeFi protocol. So it's not a completely different game, but the rules, the players, and the speed are all different. And in my opinion, the key is to just stay humble, keep learning, build systems that are both resilient and responsive. And in Web3, management is not just about defense, it's about also enabling innovation, but in a safe way.
And let's talk about another challenge. So you've mentioned that you're doing robust KYC practices, and basically that you have real-time monitoring, and you're using various blockchain intelligence tools. So another major problem that I guess you are facing, because you are on the recipient side of funds, oftentimes from your investors and so on, a huge problem is the money laundering, right? And the AML efforts is something that I'm guessing is a huge part of your role as a risk officer. So,
Yeah.
according to our data, more than $40 billion of illicit funds went through the various blockchains in 2024. How do you manage the risk with that respect? How do you build a robust AML system that can actually identify illicit funds that are flowing into your system? And by the way, what do you do with that when those funds are incoming? Do you freeze them? Do you file in an SAR report? I'm curious to hear about that.
Yes, yeah, that's a big problem, of course. That, like you mentioned, that 40 billion figure is a clear sign that while blockchain offers transparency, it doesn't automatically equal accountability. The nature of crypto transactions makes it really challenging to distinguish between legitimate and illicit activity without the right tools and frameworks. One of the biggest challenges for compliance teams is attribution, linking wallet addresses to real world identities in a way that is effective while preserving the privacy of your clients. Bad actors often use mixers, cross chain bridges, and privacy coins to hide the origin of funds, making traditional AML techniques less effective. At Poolder, we take a proactive and layered approach to AML and compliance. So we're integrating with leading blockchain analytics providers to monitor wallet activity, flag suspicious patterns, and trace fund flows in real time. We also enforce strict KYC procedures for all investors. And beyond that, we're building internal compliance protocols that mirror the standards of traditional finance. Things like transaction monitoring, risk scoring, and escalation procedures. We also stay closely aligned with global regulations such as AIFMD, the Dutch Anti-Money Laundering and Terrorist Financing Prevention Act, and the GDPR in the European Union. Ultimately, compliance isn't in crypto isn't just about ticking boxes, but it's about also building trust. And that means going beyond the minimum requirements to create systems that are transparent, auditable, and resilient against abuse. I think that's really important.
Yeah, and I totally agree with the part about not only ticking the box, because at the end
Yeah,
of the day, the regulation is evolving, and some
yeah,
of the things that are still now kind of in discussions and in talks will become regulation quite soon. So if you are serious about your risk management, you have to prepare yourself and you have to go the extra mile to actually make yourself compliant, because later on we saw it with Micah right now that new regulation are basically put in place, and then you see companies and especially chief compliance officers are scrambling to try to deal with that, while all this could have been prepared
yeah,
before that, and
absolutely.
they
Yeah.
could have they could have been much more prepared for that. So I wanted to ask you. I read the recent interview of yours. I did my homework, and I saw that you mentioned that basically AI and machine learning can revolutionize risk management, and that's basically by detecting anomalies and being more proactive. So how is being proactive, and especially with the help of AI and machine learning, and a quick disclaimer here. I'm obviously biased because that's what we do at Cybers. We basically harness the power of AI and machine learning to spot anomalies in the blockchain, whether it's security related or fraud and risk and compliance related. But I'm really curious to hear from you. Where do you see this proactiveness in deploying AI and machine learning tools?
Yes, no, I think it's really important. I mean, in a space as fast moving and high stakes as crypto, relying on reactive security is just simply not enough. By the time a breach is detected through traditional means, the damage is already done. That's why shifting to a more proactive AI driven approach is a game changer for risk management. AI and machine learning allow us to move from static rule-based systems to dynamic adaptive models that can detect anomalies in real time. And with the help of AI, we can monitor on-chain behavior, flag suspicious activity, wallet activity, and identify patterns that might indicate, I don't know, front running, flash loan attacks, or coordinated exploits. often before they escalate. What's powerful about AI is its ability to learn from a vast data set and evolve with the threat landscape. So it doesn't just look for known attacks. It can also detect subtle deviations from normal behavior that a human analyst might miss. So that's especially important in DeFi, where new attack vectors emerge constantly. Ultimately, this shift isn't just about better technology, it's about a mindset change. Security must be embedded in the DNA of a crypto company and not bolted on after the fact. So AI gives us the tools to be vigilant, responsive, and most important, preventive. So I believe we should use them. So I'm very, very excited about the future of risk management and compliance with all these tools that we have now. I think we will just become better. We will become more efficient in doing our jobs.
Yeah, I totally agree with the immediacy part that basically you can have, your real-time alerts and your real-time red flags that can help you respond in a better way. That's totally correct. And I wanted to ask you, so you mentioned that you're investing in quite a few DeFi protocols. So DeFi protocols, obviously, beyond what your trading team is doing is, to assess the yield and to assess basically the, let's say, the market attractiveness of such a protocol. The fact that those protocols rely on smart contracts, they have quite a few risks in them, right? So, and obviously beyond the security risks, you have things like impermanent loss, and you have, you know, pool drainage and things of that sort. How do you assess those pools, and how can you actually assess the risk, and how can you respond to that assessment in real time?
Yeah, so we have basically, the DeFi world offers incredible opportunities, but it also comes with real technical risks around the smart contracts. So we built a multi-layer due diligence process that goes far beyond the surface level checks. So before we allocate capital to any protocol, we run it through our proprietary risk assessment system, which analyzes on-chain data, liquidity dynamics, and historical performance. So we cover all the financial aspects of it, but we don't just stop there. Like, we also review all available audit reports, not just for their presence, but also for their quality, their scope, and whether the findings were actually resolved. In-house, we conduct our own code reviews. Our team includes developers, engineers, and security analysts who look for common vulnerabilities. For example, vulnerabilities such as reentrancy, unchecked external calls, and privilege escalation risks are important to consider. Other aspects to bear in mind are upgradability and admin key structures, which are often overlooked but critical for understanding the governance risk within a contract. This level of scrutiny is essential because in DeFi, the cost of a mistake is immediate and irreversible. And yes, it absolutely helps avoid potential frauds and exploits. There have been several instances in the past where protocols looked promising on the surface, but failed our internal checks. So I think it's really important to have these cross-functional teams where we basically looked at a contract from different angles and tried to assess that risk. In a space where trust is often assumed, we believe that it needs to be verified from a technical point of view in a continuous way and in an independent manner.
Very interesting. So I want to take you back to regulation, and we
Mhm.
talked about not only checking the boxes, and basically preemptively seeing what regulators may demand from you, and which requirements may come along the way. So I
Mhm.
wanted to ask you, how are you managing all that? How are you doing? How are you going that extra mile? And also, I want to ask you. So you mentioned the Dutch regulator, but obviously, regulation, especially in the DeFi space, is borderless, right? So
Yeah.
you can have a protocol that is licensed in one place and incorporated in another place, and your investors and the entire regulatory structure is, let's say, under the Dutch law. How do you manage all this, global regulatory framework?
Yeah. No, that's a very good question. I think navigating the regulatory landscape in crypto is one of the most complex and critical parts of my work. The pace of innovation in Web3 often outstrips the speed of regulation, which means we can't afford to wait for rules to be finalized before acting. Instead, we take a proactive approach, often going well beyond current legal requirements to build a compliance framework that's resilient, transparent, and future proof. In the European Union, we operate under the AIFMD regulatory framework. AIFMD sets clear standards for investor protection, systemic risk reduction, and market integrity. We also operate under the Dutch Anti-Money Laundering and Terrorist Financing Prevention Act and the Sanctions Act, with key requirements such as customer due diligence, transaction monitoring, and record keeping. At Poolder, we embrace these standards early by implementing a robust KYC process and transaction monitoring even before they became mandatory to us. But we don't just stop at AIFMD. We also align with broader frameworks like the Digital Operational Resilience Act, DORA. Our compliance stack is designed to be modular and adaptable, allowing us to meet the requirements of multiple jurisdictions as we scale globally. Because, yeah, there's also plans, of course, to grow. So it needs to be a framework that allows you to do that in a dynamic way. The borderless nature of crypto does make risk management more challenging. So different countries, like you say, different countries have different definitions and thresholds and enforcement mechanisms. And that's why I believe it is important to build cross-functional compliance teams that combine legal, technical, and operational expertise. We also work closely with regulators, consulting firms, and industry peer groups to stay ahead of emerging trends. Ultimately, I see compliance not as a constraint, but as a competitive advantage. By building trust with regulators and investors alike, we're laying the foundation for long-term sustainable growth in a rapidly evolving industry.
Yeah, and that's a very good point about Dora, which is oftentimes overlooked. Micah being the kind of the older brother of Dora, and Dora
Yeah.
is usually kind of neglected. So I'm glad that you've mentioned it. And I wanted to ask you. So we talked about all those different tools, right? The security tools and the blockchain intelligence tools and the real time monitoring and so on. I'm curious. Are you building everything in house, or are you working with external providers as well? How is that structure built basically inside Poolder?
Yeah, I favor a hybrid approach. I think collaboration is becoming more essential, especially in the DeFi world. The sophistication of cyber threats in the crypto space has grown exponentially, and no single organization, no matter how advanced, can cover every angle alone. At Boulder, we believe that in a hybrid approach. So we build a strong in-house capabilities, but we also actively collaborate with the specialized security firms and analytics providers to increase our defenses. External partners bring this deep domain expertise, threat intelligence, and tooling that would be costly and time consuming to replicate internally. For example, blockchain analytics platforms can help companies trace illicit flows, monitor wallet behavior, detect anomalies across multiple chains in real time. Similarly, threat intelligence providers can alert us to emerging attack vectors or vulnerabilities before they become widespread. That said, we don't outsource responsibility, so responsibility always stays with us. We integrate these tools into our internal risk framework, ensuring that insights are actionable and aligned with our broader compliance and security strategy. All in all, I think it's about creating, like I mentioned before, creating a layered defense where internal controls, external intelligence, and automated monitoring all work together to, make things safer. In a decentralized, borderless ecosystem, collaboration isn't just smart, it's really needed. The more we share intelligence and align on standards, the stronger the entire Web3 ecosystem becomes.
Sure thing. So we're approaching the end of the show. And just to wrap up, I wanted to ask you kind of a more general and philosophical question. So, one of the things that I see, and I interview quite a few executives in the industry, in the security and compliance and risk management space, and oftentimes you see, and unfortunately, that's something that I see with, hacks and incidents that, when you call a company and you say, hey, you've been hacked, and then you start digging into their basically security structure and how much do they allocate to protect their assets, you see that oftentimes it's not enough, right? Because they have the sales and they have the marketing and they have the regulatory risk that are separate from the security and the compliance measures. And
Mm,
at the end of the day, there is not enough attention going either from the leaders of the company or even from the executives that are supposed to focus on risk. You don't
mm,
see enough attention for that.
yeah.
How do you build a culture that actually prioritizes, focus on risk and focusing on what can go wrong, and not only in post-mortem when things have already happened?
Yeah. Now that's such an important point because in fast-paced environments like crypto, it's easy for teams to just focus on growth and innovation and only think about risk when something breaks. In my career, I've worked hard to flip that mindset. I believe that risk awareness should be embedded into the culture of the company, not siloed into one department. One of the ways we do this is by making risk management visible and collaborative. We hold regular cross-functional risk reviews, for example, where stakeholders from different departments like product development, portfolio management, compliance, operations all come together to assess new initiatives. This helps everyone understand the potential impact of their choices. So, not just from a technical or business perspective, but also from a risk and security standpoint. We also integrate risk checkpoints into our development and investment workflows. For example, no new protocol is onboarded without a joint review involving key stakeholders from several departments. Education is another key pillar, in my opinion. I strongly believe in having internal workshops and training on topics like smart contract vulnerabilities, phishing awareness, regulatory updates. The goal is to empower every team member to think like a risk manager, even though they don't have that job title. Ultimately, fostering a culture of security means making it part of everyday conversation, not just when something happens or after a crisis. And when people understand that risk management enables innovation rather than stifling it, they become active participants in building a faster, stronger organization.
Yeah, I totally agree with that. I think also education is key, and obviously those drills that you've mentioned that you're doing every once in a while for the different stakeholders, it definitely sounds like a good idea. So, Carla, it was fascinating. I have many, many more questions for you, but unfortunately, we're almost out of time. So, thank you so much. And by the way, are you active online on LinkedIn? Do you have a blog? Where can we read more about your work, about your practices in compliance and risk and so on?
Yes, yeah, well, yes, I have, of course, my LinkedIn account, and sometimes I post their things. At the moment, yeah, I've been very busy working on so many projects and so many things that I haven't really had much time to post in a blog or anything. But that's a nice idea, actually. Perhaps something that I should do in the near future. But yeah, I mean, I'm always involved in different peer groups and discussions with also in events in the crypto world. So I always try to attend webinars and conferences just to stay up to date with the topics that are being discussed, and also to understand what the changes are in terms of the regulation, for example, and everything that is coming up. So I think it's important to have a good understanding of what's happening in the world. And like we discussed, I mean, in crypto, things change really fast. So we need to always like look ahead, see what's coming, and try to anticipate things. I think that's really important.
Yeah, definitely. And that's part of the reason why we have this podcast, basically, to learn, to share ideas. And we're waiting for your blog, Carla. Please send us a link once you do. Great. Carla, thank you so much.
Thank you so much for having me here. It was really a pleasure. Thank you.
Likewise.
Web3 Watchdogs is sponsored by Cybers, your one-stop shop for Web3 security and threat mitigation. Cybers harnesses the power of AI to eliminate hacks, scams, fraud, and compliance challenges in real time, and even before they happen. For more information, visit cybers.ai. That's CYVERS.ai.